Welcome to our weekly Forex Forecast, and this is for trading for the week of June 3rd to the 7th, 2019. Just a quick disclaimer here, this is for educational purposes only. Trading is a risky business, so please be careful with your money. So as usual, we'll start off by taking a look at our calendar here. So in terms of our data that's coming up here, we do have some Japanese data and Australian data coming out today, and manufacturing PMI numbers out of China here. So the Chinese numbers are important for Australia and New Zealand, because Australia and New Zealand are the biggest trade partners. So the Chinese number generally have an impact on Australian dollar and New Zealand dollar. Other than that, on Monday, we have a bunch of PMI numbers out of the Eurozone here. So PMI numbers are leading indicators to retail sales, GDP, that type of stuff. So these numbers are important, and they will have an impact on their respective pairs. Now, we do have PMI numbers out of the US here as well. And the US data has not been coming out too well. It's been lackluster or negative in many cases. So we have seen US dollar take a hit because of the negative data. So if we see that these numbers are also negative on Monday, chances are US dollar will be impacted negatively by that. And then going into our Asian session here, we have retail sales out of Australia, but very, very important here. We have this RBA statement coming up and cash rate decision. So last time everybody was expecting RBA to cut rates, and they did not. And so we have seen Australian dollar kind of hold its own over the last couple of weeks here as all the equity markets dropped. And part of the reason there was because gold was going up. So gold and equities have a negative relationship or correlation. So when equities drop, gold goes up, and gold and Australian dollar have positive relationship. So when gold goes up, Australian dollar tends to do well as well. So that's why we have seen Australian dollar hold its own. But if they do cut interest rate here, that will have a negative impact on Australian dollar, gold or no gold, because it is a direct correlation between interest rates and our currency strength. So something to keep in mind here. So be prepared for that if that happens. And then we also have RBA Governor Lau speaking. So usually what happens is first we get a reaction from the rate statement, and then when the statement comes out, then there is another reaction in the market. We also have Fed Chair Powell speaking, and again, this tends to have an impact on the market as well, especially the US dollar, so keep that in mind. And then we have GDP numbers for Australia here. So quite a few things there for Tuesday. Wednesday, there's more PMI numbers out of the Eurozone here, non-manufacturing PMI numbers. This number is really important because US is not a big manufacturing center, so that's why the non-manufacturing PMI numbers are very important. And on Thursday, we have Bank of Japan, Governor Kuroda speaking. Now, with Bank of Japan, it's interesting. Japanese yen has been going up because of the equity markets dropping. So when when we see a risk aversion, usually it's the Japanese yen that benefits, and Japanese yen crosses drop. So that creates a problem for Japan because their exports become more expensive for the rest of the world. So they do not want to see, Japan does not want yen to go up like that based on other things that are going on in the world, nothing to do with their own economy. So Bank of Japan has been quite vocal about talking about monetary policy, easing monetary policy, and so forth. So they can't cut rates because they're already negative, but they have been talking about easing monetary policy further. So we'll hear, if we see the continuation of this trend of equity markets dropping, we will hear more from Bank of Japan, and they may even take measures to weaken Japanese yen. So this is why we have to pay attention to what comes out of Bank of Japan. So far, initially there was a reaction, but now that reaction sort of market is taking that in stride. Bank of Japan talking about this stuff. But if they do actually take some measures, the actual implementation, so far they've only been doing verbal intervention. So they've only been talking about it, which normally will drop the currency, but this hasn't happened because of a risk-off scenario in the equity markets. So they could announce actual measures which will then have an impact on the markets, on Japanese yen. So always keep that in back of your mind as we are trading, because they could come up with something. On Thursday, also, Thursday is a big day here. We also have Bank of England, Governor Carney speaking, and very, very important here, ECB. So last time, ECB wasn't too positive. They were concerned about trade wars going on. They were concerned about the state of basically global markets. So now, if they continue down the same path, they also they were kind of, the asset purchase program, they're kind of back on track with that. So they're not, they're going to continue that. So there's a few things that they're changing. So we'll have to keep an eye on that. So if their commentary still stays dovish, it will have a negative impact on euro. So we did see euro pull back on Friday, but this here could have a negative impact on it. So just another thing to keep in mind. So we have a few central bankers this week. So expect some volatility in the market. On Friday here, we have a few trade balance numbers here out of Eurozone, but very, very important here, we have non-farm payroll, as this will be the first weekend of the month. So non-farm payroll always, actually I should say, great percentage of time, non-farm payroll is quite a volatile event. So just be prepared. So if you're in any of the US dollar crosses, non-farm payroll generally moves the market. So keep that in mind. So busy week in terms of news, some important data and some important events coming out this week. So just be prepared. All right, next, let's take a look at what's going on with our charts here. So in terms of our euro dollar here, euro dollar is staying in a range at this point. It's still in this tiny little range that it's been in for a period of time. It wasn't able to go through this resistance level, but wasn't able to go through the support level either. So it's sitting for the last, I guess we could put it all the way up here. So it's been sitting in this range here, but the range had narrowed over the last 2 weeks here because it's just staying in that little range. Now it can go higher. So this is the bigger range, and then this could go higher. So twice price has rejected the low, which means this one could go higher. So I would look for a potential reaction all the way up into 1.1270 level, and then a drop from there, because I do not expect ECB to be overly positive for the euro. It could be, it could be neutral, but I don't expect it to be too positive. But then again, central bankers have a lot of say in the market, so they can drive prices. So we have to be careful. So we can't just go in with our eyes closed there. So this is kind of what I would expect. Move up into the top of the range here at 1.1270, and then a potential move down. Now it should like the US data be really negative or something like that, it could go all the way into this previous support resistance at 1.1340, 50 level there, and then drop from there. So overall, we could see euro push up before it drops, because it has stayed in this range for quite some time and it hasn't managed to drop, which means it could do another leg up. So I would say, so this is what I'm looking at. First target, 1.1270. Second target, 1.1350. So slight pullbacks is what I'm looking for euro dollar. Pound dollar here. Pound has dropped for a number of weeks now. Last week we had an indecision candle here, so now it's dropped. It is into support here, so we just have to be careful. But the candle here is bearish. So we have, okay, so the bias is bearish here. So the next target here will be 1.2460 level. This is where I'm looking for price to go. But the candles are getting smaller, which means we just have to be cautious with this one. And we have had a number of weeks where price has dropped. So that just means that we could get a pullback, right? So just have to be mindful of that, but bias is still bearish, looking for 1.2460 as the next target. And then below that, we have this pin, which is 1.24 or 2380. So bias is bearish, but I'd be careful with this one. Aussie dollar here, Aussie, like I said, has been very strong here compared to other crosses. So this one is looking bullish. So we could see it go higher. Now the first target is very close here, the bottom of this candle, which is 0.6960, or second one is 0.700. So right now I'm looking for a pullback. So the move that I'm looking for is something like this. So overall, though, from fundamental perspective, my bias still is to the short side for Aussie. However, we could get pullbacks during that time. So especially if the equity markets keep on dropping, gold will continue to go up, which will cause pullbacks in Aussie. So we could see it go higher. So having said that, target is 0.700. And this is where we could see price drop again. So I would keep an eye on this, especially with the Reserve Bank of Australia statement coming out this week. If they do cut the interest rates, Australian dollar is likely to drop. So just keep that in mind. New Zealand dollar here, this one hasn't really done a whole lot. During the week, it dropped a bit, but it's pushed back up, which means we could get a further pullback here as well. So the target here will be 0.6600. So slight bullish bias. Again, I'm not like heavily bullish on it. I am just looking for pullbacks. So we have had quite a drop. So we could get a pullback there or into this level even before we see that continuation move to the downside. So that's kind of what I'm looking for here. Bias is slightly bullish here from technical perspective. Okay, so I would look for that 66 would be the first one, and then we could see it go into this support and resistance level, which is very important as well. So 0.6600, 6600 will be first. 0.6700 will be the second, but I think this one could turn. If Australian dollar drops, this one could drop as well with Australian dollars. A lot of time they tend to move together. So just keep eye on Australian dollar as well when you're trading New Zealand dollar. But then I'm looking for a drop back into this support level. So slightly bullish here. Dollar CAD here. Dollar CAD has been interesting. It was trading in a range for quite some time. This was the range it traded in for several weeks. Now, it broke out of the range, and we do have a bullish candle close here. So we could see a further move to the upside. However, keep in mind that it is rejecting this next level here. So this one will have to see how price reacts. So currently, this is where it is. Now, if it starts to trade within the range here, it could go all the way to the bottom of the range. Or if it stays above, so let's say it does one of these moves, then it could go higher. So as long as it stays above 1.3480 level, chances are it will move higher. But if it starts to trade below that, then I will look for price to go back towards the bottom of the range. So it's just at an interesting level right now. So overall bias is bullish, but I would just, I wanted to point that out. We need to be cautious there. Euro pound here. So this one as well, we had a big move to the upside and then it traded sideways for a period of time here. But overall, from a weekly perspective, we are still looking bullish. Hasn't really moved out of this support resistance level. So we do need to see a break above, but from weekly perspective, this is looking bullish. Now, if it holds above, 0.8850 level, which is this support resistance level that it's been struggling with all this week, then I would look for price to go higher into 0.8950-ish level. And then higher into 0.9080. Okay, Len, you have to stop trying to control my screen. I will not be accepting your request to control it, so please stop sending me requests to do so. Okay, so now we have, so this is what we're kind of looking at, but if it doesn't go through the high here, then looking for price to come back down. So those are, so that's kind of what I'm looking at. So the main point here is our support resistance level at our support resistance level right here. If it holds below this, it's struggling with it for the last 2 weeks. If it holds below, then I'm looking for a drop, but my bias is to the upside. And this is the move that we could see. But first, it has to stay above this 0.8850 level. So bias here is bullish. Euro Swiss franc here with the equity markets dropping. Swiss is also a safe haven currency and it tends to drop. So we have a nice bearish pin bar here. So bias is bearish. Now looking for price to drop further here. Next target is 1.1100 here. So bearish bias, and below that, we are looking to fill this big, huge candle here at 1.1020. So bearish bias here. Now, do watch out for pullbacks because we could get pullbacks like this, and then that's the type of move I would expect here. So looking for price to drop and potential pullback into 1.1250 level here, and then looking for a further drop. Pound Swiss franc, same thing here. Swiss crosses did quite nicely this week. We have a nice bearish candle close. Last time we were looking for a drop, so we have that now. So looking for price to drop further. And the target here, first target is 1.2420 and then 1.2300, say. So bias is bearish. In terms of the pullback, we could get a pullback into 1.2750-ish level. So do watch out for that, but the bias is bearish here. Dollar Swiss franc here, this is bearish. We have a bearish pin bar here and looking for price to drop. So the next target is 0.9900. So bearish bias for dollar Swiss franc. Pound yen, this one has dropped nicely here as well. Yen was definitely our friend there, especially after tweets from President Trump. So President Trump has announced tariffs on Mexico, and this was to kind of go control immigration. And there has been so there's been comments out of him from President Trump where he said that, well, tariffs will be good for other reasons as well. and he listed a bunch of reasons, but the main point was immigration. And it will be interesting actually this week, and this is something else we need to keep in mind here, is that so US, Canada, and Mexico are currently they have reached an agreement, but now they have to ratify that agreement. And because of that, this is a critical time where the parliament has to pass those, right? Now, if we start seeing tweets like this and random tariffs coming out while they're trying to ratify those trade agreements, it could have a really negative impact on the markets and on the trade deals. And if the trade deal does not go through, they do not get ratified because of this type of occurrences, then it could have a negative impact on the equities markets, which means this will have a positive impact on Japanese yen, and Japanese yen crosses are likely to drop in that case. So that's the sort of the correlation there. Just wanted to point that out. So keep that in mind as you're trading. Very important right now to keep an eye on what's going on in the news and what kind of comments are coming out. So in terms of our yen here, last week we were looking for a drop. So we got that nice drop here. So this week, again, we have a solid bearish candle close here. So looking for it to drop further. First target is 135.50. Second target 130. Actually, we could probably pull it closer. Second target is 134.20, and then the target will be all the way into 131.80, which could take a while for us to get there. But for now, looking for a pullback and then a drop. Bias is bearish, so either a pullback into 137.50 and then a drop, or into 138.50 and then a drop. But overall bias is bearish for pound yen. Euro yen as well. Last time we had a nice bearish pin bar, nice drop. So it went in our direction, which is great. Now, in terms of our forecast here, bias is still bearish. That's a nice solid candle close. Do watch out for, what do we want to say? Do watch out for the ECB speaking here, and also what comes out of the US in terms of either tweets and White House. So White House actually has been saying that the Mexico tariffs are only for immigration, so that there can be some immigration changes, but it does not have to do with trade. But the way President Trump tweeted just the other day, it sounded like it could be more than just that. So those kind of comments can really have an impact. Now, if there are comments in regards to US and China meeting in Japan, those will be positive for the equity markets, because the markets do not want to see trade wars. They want the commerce to proceed like normal, because both sides suffer when there's a trade war. So markets do not like trade wars, and any indication that shows that the trade war could be coming to an end will be positive. So if we hear comments saying President Trump and or US and China are meeting in Japan to have further trade talks, that will be seen as a positive thing, and equities will go up, and so will the yen crosses. So just wanted to point that out, but bias is bearish. 119.30 here will be the target to the downside. So bias is bearish. Euro yen, huge drop here the other day. So bias here is bearish. We kind of went through our target here. So we have a new, let's take a look at new targets here. So bearish bias, first target is 107.60. And then below that, we are into 106.80. So bearish bias here. And in this case, I would look for a pullback and a drop here. So bearish bias for dollar yen as well. First target 107.60, second target 106.80. Aussie yen, this one sat in that range the entire week and finally broke down on Friday. So here the bias is bearish here and looking for a move to the downside. 74.50 is the first target. 73.60 is the second target. So bearish bias for Aussie yen. New Zealand yen here, this one also dropped here. Now bias is bearish for this one because we have a nice bearish candle close. It did break through that support. So looking for a further move to the downside. And this is the type of move I would look for. Actually, this one could go slightly higher here into 71.50 and then a drop. So bias is bearish for New Zealand yen as well. In terms of the target, so 69.80 is the target here. And the problem here is that we could have some solid support here because price came here last time during flash crash and then pushed back higher. So this was back in November. And then in 2016, so this is a multi-year low here, and there could be some important support or buyers sitting there. So just watch out for that. So overall bias is bearish here. So 69.80 is the target. And then below that, we have 69.20. So 69.80 and then 69.20. So bias is bearish here for New Zealand yen as well. CAD yen also dropped after a few days of just being sideways move here. So it did a nice back test here and a drop. So bias is bearish here. And in terms of our targets, we have the first one is 79.00, and then below that 77.80. So bias is bearish here as well. And in terms of the move, I would look for a pullback, kind of like that. And this, we could probably move it lower. So pullback potentially into 80.80 level and then a drop. But bias is bearish. 79.00 is the first target. 77.80 is the second target here for CAD yen. But keep an eye on, we've had some big moves here in the equity markets and the yen crosses here, which has been great. But do keep a close eye on equities, because as soon as equity markets get a whiff of something positive, they're likely to pull back, and that could create pullbacks in these yen crosses as well. All right, so let's move on to our gold. Like I said, with equities dropping, gold goes up. And this is what we have seen, a big move up in gold. We were looking for a move up and we got that. Now it is still looking bullish here. So bias is bullish still. First target is 1312. And then we're looking at 1325. So bullish bias here for gold as well. In terms of pullback, it could pull back into 1298 or even into 1296, around that area. And then a further move to the upside. So first target is 1312, second target 1325. So bullish bias here for gold. Silver here, silver's kind of gone up, but not as much. It did come down and now we're pushing back higher. It's not as strong as gold. So looking for price to, we could see price go up here. So I would look at this 14.80 level. So pull back. And then it could get stuck here because this is important support resistance level right on this side here as well. So right now, a slight bullish bias here for our silver here. And first target will be 14.85. Second target will be this 1508. So bearish slightly bullish bias, and then we could see a drop. Oil has been dropping, and we talked about this. It may have been in our daily analysis calls, but we were talking about this setup, and I had drawn this on the chart a few times when the price was stuck in this range here. So we got that. So we had a big drop, a pullback. So this is our continuation flag pattern. So you have initial drop, then price goes sideways, consolidates sideways, and then drops, right? So so we got that. So bias right now is bearish, but we have had large moves, so just be mindful of that. Huge moves to the downside. Last week we were bearish on this, and of course we got that move now. It is still looking bearish, but as we can see, oil can drop for a bit, but just to be cautious, because we are coming into support here. So bias is still bearish. So looking for a pullback here and then a drop. And below that, we're looking at, let me just draw a support resistance line there. So anytime we have large moves, always watch out for pullbacks or reversals. So 51.30 will be the first target, 49.30 will be the second target. So bearish bias here for oil as well. Copper has dropped. Last week we were bearish. We have that move. And now looking for a further drop. First target would be 2.60, then 2.50. So bearish bias for copper as well. Bitcoin. So Bitcoin, I do not have the current chart here. This is just as of the Friday close. It's looking bullish still. And we had talked about how if it stays above this level here, it's going to be bullish. It did pull back a little deeper than I was looking for on Friday here, but it still looks bullish. But then again, please check the current chart. And just looking here, if it makes through this, then only looking at 97.80. So this will be the next target here. So far from this chart, this looks bullish. All right, let's take a look at bearish here. $27.50. Okay, that's updated now. So we have a bearish drop here. And this is bearish in terms of pullback. 27.80 looks like a good level for a pullback. Target will be this one here, 27.20. And if it goes below that, next one is 26.80. So bearish bias here, further move to the downside. Targets are 27.20 and 26. NASDAQ, refresh my chart, here we go. So this one's also looking bearish, and target here. First one will be 69.75, and then we're looking at 68.70. So bias is bearish here for NASDAQ as well. So we could get a move like this, pull back, and then a drop, and further drop. So bias is bearish for NASDAQ as well. DAX here looking bearish as well. Big bearish move to the downside. So here the next target. So we have a support resistance right over here. So I'm going to mark this 11475. So let's say 11500 will be the next target, and then below that we're looking at 11280. So bias is bearish, and the type of move here is a pullback and then a drop and then a further drop. So bearish bias here. This one, FTSE, this is also looking bearish here. Let me just make sure it's updated. Okay. So bias here is bearish, and next target is 7050, and below that we've got 69.80. So bearish bias here for our FTSE as well. And again, we could get a bit of a pullback here, like that, and then a drop. So bias is bearish here. Next one here is, this is our Nikkei. This one has dropped as well. And now looking for price to drop further, 2-0. So pullback here. I would look for a pullback into 2080, and then a further drop here. So first target is very, very close, 2025, and then 19775. So bearish bias for Nikkei as well. All right, any questions before we wrap it up here? All right, so we will wrap it up. You guys have a wonderful weekend. Oh, and if you would like the spreadsheet that comes with this, you can just go to tradingwithvenus.com/forecast, and you just need to sign up once, and then you will receive the spreadsheet with it. All right, so that's it. Have a wonderful weekend, and I will see you guys next time. Bye for now.